Is it time to reevaluate how you do your banking? With the rise of technology, we have seen online banking and digital banking really change the industry as we know it today. They're giving a lot more convenience to depositing money, withdrawing money, spending your money, as well as a lot of perks and tools that come with financial institutions. And of course, when you start getting into the digital world without having that physical counterpart, it has the ability to offer a much higher yield. So it is time in this video to reevaluate your bank. And if your bank is still doing any of these things, it is time to shop around. Starting with our first one, offering lower savings accounts and APYs. Now, as of January of 2024, the average savings account offered a 0.47%, which is kind of crazy. When you start looking at larger financial institutions, they offer the rock bottom 0.01 or 0.02 APY on all deposit amounts in regular savings accounts, which is crazy because, of course, when you start looking at your brick and mortar locations, they are not offering you anything to keep your money there. So what's the reason to do banking with them? When you have so many options out there, even looking at M1 Finance, which I have a link down below, I have a 5% high yield savings account where, again, when you look at, 50 to 500x, depending on where you're at, it is kind of incredible to see. When you look at the banks and when you look at institutions, digital banks can offer, again, a much higher rate, but definitely, without a doubt, do your research. Now, me personally, I've been in the financial industry for 17 years. I have seen the rates go from absolutely nothing to the tremendous rates that we're seeing today for not only mortgages and auto loans, but also for saving rates and CDs. They are doing incredibly well. And if you like the channel and like the content I'm putting out there, definitely subscribe to the channel. Looking at number 2, high maintenance fees. That is right. We see maintenance fees on a monthly basis, and they are notorious for charging a lot of fees. That is the reason why President Biden is trying to get rid of all of those junk fees. If your bank is charging you to bank with them, find another place. We see fees as low as $15, some fees as high as $100 a month to have an account. Now, of course, a lot of them do require minimum balances. They require direct deposit. There is an entire demographic of financial institutions, including your credit unions, that do not charge anything when it comes to the fee structures. They don't have the annual fees. They don't have the monthly fees. Making sure that your bank is not charging those fees is going to be an absolute game changer when it comes to finances. Now, of course, number 3, requiring the higher minimum balances. Some of those require you to have minimum balances over $2,500. Some of those do require you to have a mortgage with them, to have loans with them. Now, again, we have seen fees from financial institutions that are upward of $100, which again is kind of crazy. Even looking at some of the standard checking and savings accounts, they might be a little bit lower. But overall, when it comes to the fee structure, you have to understand that a lot of institutions are not based on fees, and they do not have the fees that we're seeing from the larger institutions. And of course, when you want access to your money, you want it, and you want it like you need it. Number 4, limiting your access to fee-free ATMs. For a majority of the larger institutions, looking at Chase, Bank of America, Fifth Third, if you do not go to their specific ATM, chances are you're going to get a fee from an ATM, and you're also going to get a fee on the back end from that financial institution. Now, again, when you think of digital banks, there's a lot of institutions that do offer fee-free ATMs, and even if you are charged a fee, they will reimburse you for using those fees. Now, when it comes to the fees, they can be as low as $3 to $5. We have seen them as high as $15 to $25, depending on the location you're using that ATM and if that ATM is in the network and out of the network. And of course, there's no reason why you shouldn't open a checking account where you're not only going to eliminate the monthly fee, the annual fee, and you're also going to have the ability to withdraw your money from ATMs as you do need it. Now, number 5 is the products and services. When it comes to products and services, we are looking and really focusing on 1, the emergency fund, and 2, the high yield savings account. High yield savings account is the one and only place that you need to go ahead and park your money. When you start looking at fintechs, when you look at neobanks, when you look at digital banks, this is where they really set themselves apart. When you're looking at keeping your cash liquid, keeping it in an institution that is offering you a 5% return, there are no traditional banks that I am aware of that really doesn't offer, that offers those high yield savings accounts at those very high rates. Majority of institutions, especially where I'm at right now in Michigan, they are offering CDs at roughly the amount that digital banks are offering those high yield savings accounts. And of course, this is where you're parking your money. A lot of those digital banks offer checkings, offer the high yield savings. They have CDs, they have the money markets, but you also do have to remember the product offerings when it comes on the other side, when it comes to your mortgages, when it comes to credit cards, when it comes to loans. You have to make sure what rates you're paying for everything across the board, because of course, the financial literacy and the education piece is where my big focus on. Now, when you look at those products, where can you shop around? The banking industry is an ultra competitive place, meaning that you could take a loan that you possibly have at one institution, move it to another institution at a much lower rate. It is going to save you a lot of money. This is also when we talk about credit cards with those balance transfers, and also looking at consolidation loans to cut your interest rates in half. When it comes to credit cards in general, they are running about a 25% interest rate, which is very, very absorbent. When you start getting, that $5, $10, $15,000 balances on there, chances are you're not going to be able to, and you're not going to afford the monthly payment at a certain point. And even if you're making that minimum payment, the chances are, again, that your balance is not going out like you want it to. And the final one, of course, is outdated technology. A lot of the older financial institutions have a ton of outdated technology, from websites to applications. A lot of them don't work very well. When you start looking at some of the larger institutions that offer credit monitoring services that are very easy to navigate, very easy to move money, there are a lot of places, and it is a very competitive industry, making sure that you are getting the most out of your money, because of course, every dollar that you save, and this is what I stress more than anything, every dollar that you're not paying in interest is a dollar that you can put elsewhere, whether you're using it to really put back into paying off the balances on that high interest debt, if you're taking that dollar to invest it into some of the investment accounts that we've talked about. It is really who of you, and it is up to you to take ownership of the bank account. If you're being charged fees, you really need to look at another institution, because there are a lot of institutions that would love to have your business and really compete with your business. And also be cognizant and be aware of the offers. Now, recently I did get one from a local bank here, Citizens Bank, that was offering me $800 to open a checking account. Seems kind of crazy, but you had to put direct deposit into a checking account, $10,000 into a savings account, and they would give you $800. Now, I've seen the exact same thing. I actually got one just recently from Capital One, where if I did a Capital One account with a Capital One checking and I deposited $1 million, which I know is a big price tag, they would give me a $2,000 bonus for that deposit. And then, of course, it was tiered all the way down to depositing $10,000, which would give me a $400 bonus as well. So again, you have to know the offers if you decide you want to play the game. Also remember that you do have to pay taxes on the money that is earned for opening those accounts when it comes to those offers. But definitely, if you're looking to get into a financial institution and if you're comfortable with technology. Now, I know for a lot of the baby boomers might not be as technology savvy as some of the millennials or some of the Gen Z, which do everything online. But again, when it comes to banking and when it comes to in the entirety, M1 Finance has a great program. I believe Robinhood has a credit card that is coming out right now. There's a lot of really tech-heavy financial institutions that will treat you and do incredibly well. So, all right, guys, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.